Anybody who goes into it have to learn the basics. And if you don't learn the basics, you will have problem. So today I want to do something about um, forex, forex basics. The basic things that you need to know about forex. If not so, you will just lose your money. I hate people talk about forex and they have how they lose their money. I don't want to talk too much. Let's go into it. The first thing that you need to know about forex, first of all, you need to know what forex is. What is forex? Go and find out that for yourself. Then the next thing that you need to know is currency. First thing that you need to know is forex. What is forex? What is forex? Next thing is that you have to come to know your currency pair. Your currency pair. Currency pair. So we are to do we will be dealing with we are going to be dealing with the euro. You know there are different currency pairs. We have the Japanese, we have the dollars, we have the francs, we have the euro, we have a lot of money across the world. Because currently, forex is all about you selling money and buying money. So you need to know which of the money that you are buying. And here we want to narrow down to our euro and USD. USD then means dollars, euro and dollars. The next thing you need to find out to know is about candles. For you to be able to study forex, you need to know about candles. Without you understanding candles, you will not be able to do that. There are different symbols that people uses to analyze the trade. We have the halo candles, we have the bar charts, we have the bars, we have the lines, but the best of all that we know that can be used is candles. So we will talk about these are the things that we are going to talk about in the times to come. Candles. We'll talk about candles and different kinds, and we'll talk about candles and how we can be able to read the characteristic attributes of each of the candles because candle represent about the trade. The trade can be in time frames. The next thing we're going to talk about is time frames. The time frames. Time frames. Time frame. We have different time frames. We have the 5 minutes time frame. We have the 10 minutes time frame. We have the 15 minutes time frame. We have the 30 minutes time frame. We have the 1 hour. We have the 4 hours. We have the day time frame. You understand? So you need to know which of the time frame that you are using to be able to trade forex. You understand? Because a lot of people just enter into forex without even know anything. So you need to know about the time frame. And the next thing we're going to talk about, we'll be talking about the liquidity. Liquidity. Liquidity in forex. Liquidity has to do where market is taking place. The buying and the selling is a market space where you buy and you sell. Market, the buyers and the seller meet where demand and supply are being exchanged. So you need to know more about the liquidity. So those are the things that you need to do. The next thing that you're going to learn about is knowing about the demand and the supply. You know, we have the demand and the supply, which we call the bullish and the bearish. Now, the bullish have to do with the going up, while the bearish have to do with the coming down. Then the bullish have to do with the demand, and the other one has to do with the supply. Then the other one have to do with buying, and the other one have to do with selling. So all that the things that you get to know when you are talking about the demand and supply under the bullish and the bearish this thing. Then the next thing we're going to talk about is the price action. Price action. You know, without you understanding price action, you will not be able to trade forex. You need to know about price action. The next thing we're going to talk about is indicators. Indicators. Indicators are very, very important because they tell you indicators. There are different forms of indicators to guide you, to help you guide you in the trade. Now we have, I don't know which of them to start. We have the pivots, we have the resistance, or those are part of it. We also have the ATR, we have the RSI, we have the MACD, we have the Bolingo, we have so many kinds of indicators that can accelerators that can help us be able to determine the market trend. Because without you understanding these indicators, you will not be able to know to trade on forex. So anybody who does not know indicators can never trade forex. The most important thing is indicator that you need to know is ATR. ATR. Without ATR that will tell you about the volatility. Volatility. ATR will tell you about whether the market is volatile or not. Without you understanding the volatility, you can never trade. In fact, without understanding the volatility, you cannot even trade. So if you are going to do trading, you need to know volatility, and you cannot talk about volatility when you don't talk about ATR. ATR has to do with average trade range. It tells you about the volatility of the market. The next thing we are going to look at when we are going to do our training is we're going to look at the supports. We're going to look at the supports, and we're going to look at the resistance. The support and the resistance level is very, very important, because without you understanding the support and the resistance, you cannot take your trade. Although there are so many things that we're going to learn when we are going to do, because we're still going to learn something about your take profit, and your support. Without you knowing all these things, your entry points, knowing all those things, there are a lot of terminology that you need to learn in forex, because without you understanding this terminology, you may not be able to trade in forex. Now, you also need to learn about volumes. These are the terminologies that you will get to know. You will be hearing something about the sweep. There are a lot of things that you need to learn about the key levels. You need to learn something about the key levels. Then you need to know, you also learn something about the rejection areas, and bouncing areas. I don't know what I talked to you about. You also learn something about the pivots. These are also indicators. Pivots. So many things that we are going to learn about forex, because all these things, by the time you learn all these things, learn about the currency pairs, you learn about the currency pair, which is the euro, you learn about the candles, learn about the time frames, you learn about the liquidity, the bullish and the bearish. You also talk about the price actions, indicators, ATR, which are also under indicators, the volatilities that will tell you, talk about the volatilities and the oscillators. All those ones are part of the indicators. Then we also talk about the support and the resistance. Those are the things that can help you take your profit and have your entry points. All these things that will also help you have your entry points. Without all these things, you cannot trade. It will help you get your entry points. And those are the things that can help you determine the trade. Then we also have something like the volumes. We talk about the volumes, we talk about the key levels and the rejection and the bouncing areas. And these are the things that you're going to learn in the course of this trade. But I want to say, let us still move further and do a little thing about the candles. This thing, candles are very, very important. Without candle, you may not be able to understand Forex. Let us take, there are different kinds of candles, but we want to talk about the, the doji, engulfing, the doji, engulfing the spinning, the hammer. Then let's look at some few aspects of candles so that as you are trying to study, you are going to learn more about it. Because Forex is very, very important. Now look at, we have different kinds of candles. We have, let's look at the candles and their characteristics. Now we have the doji. We have the doji candle, which you see it has a mark like this. We call it doji. These are signs of, uh, this is a sign to tell you that there's a break. The buyers and the sellers, they have a break. They're thinking what to do. That is, you see this in this thing. Then we also have the hammer. We also have the hammer with a long leg. It's also a doji. Doji, hammer doji. Then we also have another indicator. Also, it also shows this doji here tells you that if it is on the bearish side, it tells you that the market is going to go down. When it is on the bullish side, it tells you if it is on the bullish side, this is the long leg hammer. It's also a doji. If it's on the longer side, it will tell you that the market is going up. These other dojis will tell you that there is a break. You understand? So when you see the other thin one and thin this thing that shows up, no candle might be a bigger candle. They might have a bigger kind of candle. So tell that the smart buyers have come in. That's the banks and the ages and the big cooperative. They have come in to be able to take the trade. So when you see something like that engulfing around a smaller candle, know that this is a bigger corporation that have come in. So this other one, once you see a small candle like this, maybe with a small sign, it's to tell you that there's going to be a breakout. And once that breakout comes out, that is when you have something like a bigger candle. And this bigger candle sometimes engulfs around a smaller candle. Once it engulfs like this, it breaks. But I don't want to go to start to tell you how to take a trade and all of that. I'm only trying to tell you something about candles. Like when we come to talk about taking of trades and taking of undertaking on running our resistance and our support areas, we'll be able to tell you much about this. But for now, we are going to only focus on candles and their character. So we also have a spinning doji. We have a spinning doji. Also, it has a leg like this. All these things are just to tell you that there is a rejection somewhere. It's either they are bouncing up or they are bouncing back. But all these things will tell you that there's another spinning candle also that looks like all of them they are dojis. You understand? Some they are smart. Some when you see this one is if you see something like this and see something like this, one of these is to tell you it's a break. It's a sharp break. You understand? So all these things are to tell you the movement of candle. Then let us talk a little bit about the uptrend and the downtrend. Now we also have the bullish forms of candle. Candle we have, we have the breakouts. We have, let us say, I want to show you. This is a candle. And there's another candle here. There's another candle here moving up. Now, when the candle forms like this, it goes, this is what we call the bearish, the bullish, the bullish. This is a bullish candle. And this bullish candle, there's what we call the opening and the closing. When a trade starts, this is what we call here the opening price. You know, trade is all about markets. So in that market they are selling. Supposing you are taking a yam to go and sell, there's what we call opening price. You understand? In that morning when you are taking that price, market the stocks of your yam to go and sell. You are taking a 1 tuber of yam may represent 1 tuber of yam may represent okay, so you say 1 tuber of yam is say 500 naira. Okay, let's use 1,000 naira for 1 tuber of yam. So 1 tuber of yam in the opening price of the market in the morning was maybe 500 naira. Let's use 500 naira. Then over the period, there were what we were calling bid. The market were bidding. This one come, madam, you know, go fit sell 500. Won't you sell 500? Won't you sell 450? Won't you sell 350? You know, those bid, they have been bidding. Then at the end of the day, the market was closed with maybe 450. You understand? This is what we call close. So in the following day or in the following time frame, when you want to start the market, this is your close. You are now starting the market here. We call it breakout. You are now starting the market here now with 450. And this 450 becomes your opening. Are you following me? This 450 now becomes your opening. Remember when you started, this is a candle. And this candle represents a market trend. So this opening now was 500 now.